Hey everyone, welcome back to another little episode of Mondays with Matthew. Unfortunately, time got away from me yesterday and I didn't get a chance to record or upload the video, so I guess today is Tuesday with Matthew. I wanted to come on and talk to you guys about something that seems to be a growing issue in our lives today, and that is how your student loan debt can affect your mortgage eligibility. There are two main things that your student loans will affect, and those two things are your debt to income ratio and your credit score. So what is your debt to income ratio, otherwise known as your DTI? Your DTI is the amount of debt that you have compared to your monthly pre-tax income. In general, this is going to include things like car loans, student loans, minimum credit card payments, and child support. It does not include things like car insurance and utility bills. Now, you're probably wondering how to calculate your debt to income ratio. And there are two different formulas that lenders are going to use to calculate your DTI. And they call them the front end ratio, also known as the housing ratio, and then the back end ratio. The front end ratio is the percentage of your gross monthly income that will be going towards housing expenses such as the principal, interest, taxes, and insurance. And to calculate this, you're going to take those four items, principal, interest, taxes, and insurance, and divide it by your gross monthly income, and it'll give you a percentage. Most lenders are going to want to see anything under about 28% on that front end ratio. Now, on the back end ratio, that's the portion of your gross monthly income that will be used to pay all other debts, including the housing expenses. To calculate this, you're basically going to add all of your monthly debts, not including things like your phone bill, car insurance, internet, or utilities, and you're going to divide them by your gross monthly income. Once again, you'll end up with a percentage, and most banks are going to want to see anything under about 36%. However, on some government-backed loans, such as FHA loans, they might be willing to go a little bit higher. So to kind of sum up that section about the debt-to-income ratio, basically, the more debt you have or the lower your income, the higher the debt-to-income ratio is going to be. And then the second way that your student loans are going to affect your loan eligibility is through your credit score. Now, obviously, there are so many different things that can affect your credit score, but for some people who might not have a credit card or a car loan, student loans and your payment toward them is one way that your credit score is going to be greatly affected. Payment history makes up about 35% of your FICO score. Obviously, lenders are going to want to see a strong history of on-time payments. By making on-time payments over a period of time, you're going to start to boost your credit score, and then any late or short payments are going to damage your credit score. When looking at different loan options such as your FHA, VA, rural development, or conventional loans, they're all going to have different credit score requirements. So I reached out to my friend Ryan at Regent Financial to get some information on those minimum score requirements. When working with something like FHA or VA loans, you're going to see a minimum of 580. However, anything under 640 for a credit score is going to be very challenging to get approval. And if you're under that 640 range, the applicant is going to need some compensating factors such as a low debt to income, a large down payment, or a good amount of reserves like funds and savings to kind of help pay future mortgage payments. When working with something like rural development or a conventional loan, the minimum score requirement is going to be 640. However, anything under about 680 is going to present the same challenges as before, and the person applying is going to need that low debt to income ratio, a large down payment, or that nice amount of reserves. That basically sums up everything that I kind of wanted to jump on here and talk about today. So I hope everyone stays warm and you enjoy the rest of this chilly week. Thank you.